All 100 of us. You've got friends here.
你知不知道？你在不在？
我不知道。Welcome everyone. We'll talk about DeFi today. My name is Zez. I am co-founder of Vesta. Vesta is a DeFi protocol on Arbitrum, which is, you can see it as a sub-network of Ethereum. And here we have Ben with me as well.
Yeah, Ben, I'm doing a lot of investing, and most recently with Evernew. We've been investing for the past 4 years or so in crypto. Stage agnostic, so from seed stage to growth.
Yeah, that's great. We're mainly going to talk about DeFi as go at it chronologically. And I was thinking that we can start with the very early days, and which is, MakerDAO. I think Ethereum, ever since it was launched, it didn't really have very strong product market fit. DeFi wasn't really big from 2017 to 2018, even 2019, until the summer of, or I guess the start of 2020. There were a couple really big DeFi applications emerging. At that time, I think the biggest one was an application called MakerDAO, where you put in Ether and you mint a stablecoin out of it. It's the same thing as if you go to a bank and you can collateralize your house, and then you can take out some dollars against your house. The very first one that gained a huge amount of traction, there was an application called Synthetics, where it's similar to Maker, except you could mint all kinds of stuff. You could mint a token that tracked the price of Apple, a token that tracked the price of Tesla, all that good stuff. What they did was they started a trend of yield farming. That was the start of 2020. A couple months after, it was known as the DeFi Summer. So that was the summer of 2020. Huge scene of mania. The whole market was very irrational. People were buying into all kinds of random stuff. There were all kinds of different projects emerging, may it be original or not. Referring to your graph, Ben, that would be the mania phase. Let me try to find the picture actually.
Yeah, the graph we talked about it's been around of how people saw technology gain adoption. You have a new technology that happens and people think it's magic. So you have a lot of expectations. A lot of times those expectations, there's too much hype. So then, reality does not meet the expectation, and then people get disappointed. Throughout that entire time, there's early adopters, there's people that are still building in the space. And once you start to gain some real use cases, it starts to increase in adoption again and become to go mainstream.
I'd say that DeFi Summer was right here. The peak of DeFi Summer might have been peak of inflated expectation. Somewhat debatable, because it was a very interesting time, because I'm really fortunate to meet some of the really legendary investors that came out of DeFi Summer. When I talk to them, they always tell me that during DeFi Summer, it was the easiest time to make money. I had the exact opposite of an experience. So these guys were, entering into opportunities quite early and forming their thesis, and then, evangelizing them across the whole community and stuff like that. I was actually the ones who were buying at the peak during DeFi Summer. So I made $0. I think I lost a ton of money in DeFi Summer as well. And so it's just really interesting to see this different in experience. I think with 2021, however, it was increasingly becoming much more competitive. You just saw like each narrative die down much more quickly. Some of you might have also dealt a lot with NFTs, right? So with the early NFT projects, you didn't really have to do anything. You literally just had to mint as long as the project had sufficient amount of marketing going on, there were always buyers on the secondary market. That's basically exactly what happened in DeFi as well. So I just thought that was pretty interesting to point out.
I think in general for technology, people overestimate in the short term, right? But then they underestimate in the long term. Like later in the last year and then coming into 2022. So all these institutions are coming in to try to bridge these two worlds, because with DeFi, it's one of the first times that just as easily as you can send text, right? You actually don't need permission from your own bank or, you know, from anybody to send money the same way you can send data. And I think that was really powerful.
DeFi enables for a permissionless way of, you know, innovation on the money layers, as well as there's just overall much less restrictions. Personally, I've been thinking a lot about is this concept of denationalization of money. Technically a concept pioneered by, you know, an economist back in the 20th century. But what he argues for is that currently all of the money, they are, you know, controlled by nation states. They're not necessarily serving the consumer's interest at all time. Now people have the option of choosing what's a better kind of money. It will eventually, I wouldn't say cancel inflation, but minimize inflation, because people will choose the type of money that will minimize inflation and is the most stable, serving as a real unit of account and so on and so forth. As someone who works on a DeFi project, so I think that is ultimately the goal, really. It's clearly, you know, not in the interest of government to facilitate that, because government have control over money issuing and this and that, and it's really in their interest to do so. You know, if managed correctly, it does bring a country to prosperity, but at the same time, it also is very easily abused. We can see what's happening recently with, you know, inflation. The ones that could control money printing, they could also mint a lot of seigniorage toward their own interests, which is exactly what's been happening in the past 2 years. You know, on a very, very high level, on a very, you can almost say idealistic level, the ultimate goal of DeFi, of such a permissionless infrastructure, is to enable for a you know, denationalization of money. Currently, the DeFi innovations are not really toward that direction. I would say most of the DeFi innovations are more as fintech products serving the current unit of accounts, which is US dollars. You can almost see a DeFi TVL is fairly correlated to the total amount of stablecoin on chain. Even though it is idealistic for me to talk about, oh, you know, we're going to create a better money that is inflation hedged and so on and so forth. But the reality is we're still really far off from that, I would say. And, you know, people are still quite often sticking to US dollars. People are in this space to, you know, try to make a couple more bucks and so on and so forth. What do you think about this, Ben?
Yeah. I mean, one way to think about it, right, is like DeFi is here to set people free. It's not really to like make money. Like you can make money on top of it by using it to do useful things. Like to the point on the government controlling these things, it's difficult to move away from kind of this government controlled issuance and unit of account. If you want to, you know, think really far out, right, more as sci-fi, imagine if, like, you know, people can live on the moon, for example, right? There's no countries yet. It's very open. Like what type of currency could you use, right? If there's no longer one government kind of governing the whole area. A lot of these sci-fi people have these like credits, right? And it's super interesting that it's almost like a Bitcoin or some algorithmic thing. Like the government cannot inflate it. People exchange it across. Like they know it's stable and it's not in the control of any single party. As long as the adoption can continue, there just has to be enough people that can all accept it and use it to buy food and housing and basic things.
One school of thought I've been exposed to as well is currencies, they need massive amount of coordination, especially in the past. It is very often that the most used currency is being controlled by a small group of people. There is always a chance of abuse. I would almost say that DeFi could see a trend toward the same direction, even though, money might become competitive, right? Denationalization of money might actually happen. But if we don't transition to a state where it is perfectly competitive, it's going to go into a monopoly / oligopoly situation again. And there exists abuse of power, abuse of responsibilities. What DeFi enables is actually codification of rules that could potentially prevent those things from happening. You can kind of see this with MakerDAO. MakerDAO is one of the slowest moving organizations in the whole world, I would say. Through the effective decentralization of not only, how the code is executed on the Ethereum blockchain, how it's, has all these validators, all that good stuff. It's also decentralized in its governance. And so this decentralized in governance may seem like a really bad thing where, people are not moving fast enough. You're not moving fast and break things. The ethos of crypto, the ethos of DeFi, of decentralizing governance, of decentralizing execution power is effectively preventing the aggregation of power and subsequently the abuse of power from happening. DeFi is definitely quite interesting to think about, and it's eventually will succeed if these ethos were to be, continued by the project's builders and so on and so forth.
What sorts of things do you think we should be built with DeFi? Like decentralization assumes zero trust. And the trade-off with that is higher friction, right? So if you inherently trust no one, you have to incur the friction somewhere. If you trust someone, it reduces friction. So I think there's, somewhere in between, right? It's almost like these privacy versus value debates all the time of how much privacy and data are users willing to give up to get a free service that's easy to use. It'd be good to think about what should be built or what could be built. Now you have a ton of stable coins on chain already. You have a lot of the assets in this world. What can we build that's useful?
One that's really relevant to a stablecoin builder like Vesta. I think one thing that would be very interesting to build is, an inflation-hedged stablecoin. I might be wrong here, but I do believe that this product is one that if you build it, people will actually come, except it's really, really difficult to build because I have no idea where that yield is going to come from. You have a base token that is literally inflation hedged, right? And you make the peripheral applications around it very, very easy to use. For example, you plug that into Coinbase Commerce and you enable people to use it on a day-to-day basis. People have, good UX-based applications to use to spend that money, so on and so forth. A really, really stable currency is one that could drive the ultimate use case. That's kind of my perspective. What about you?
If we actually look at where the adoption is today, it's actually pretty interesting, right? Some research done by, I think, the World Bank and Chain Analysis, but Vietnam has the highest crypto adoption, and a lot of the countries that rank highest on crypto adoption are emerging economies, right? So if the system the regime in your current country is not working, right? Before DeFi and before these things, you really had no choice. It's allowed people to kind of escape and like to move to US dollars, for example, or to other currencies and essentially government regimes. Where in the past, like you would not have permission to, because you would have to go through your current bank, and then the government may not even let you convert the currency, right? So China is a good example where they have very strict limits on those. Like this use case is already playing out, that it's providing value for people to find safety by moving things around in a permissionless way.
A killer use case that I just mentioned, one that is inflation hedged, would be a superior product to the US dollars. But the developing countries, they already have their access to the stablecoins, to USD stablecoins, are already a superior product to their current, to their own currencies. I believe that is also Tron's go-to-market to a certain extent. Like a lot of their volume comes from developing countries as well. I don't really have the data at hand, but that's something that I found really interesting, even though it's fairly dismissed by the Western-driven crypto Twitter community. I would say we can open it up to the floor and see if anybody has some questions. We've covered quite a lot of grounds, largely ideological talks. But if anybody has very targeted questions, please feel free to raise your hand. Recently, there's this what is it called? Gobbler. Have you heard of this one?
Yes.
Yeah. What's everyone's thoughts on that?
I haven't really read the papers, but it's certainly proving to work out quite well so far.
That's from the Rick and Morty creators, right?
Yeah. Work with the Paradigm guys. Paradigm is one of the most prominent crypto native venture capital firm.
I view them as like a media brand, right, or entertainment company. But you're crowdfunding people that buy into the vision of some experience you want to create. So whether that experience is enjoying the artwork or joining a specific community. But like once you have this audience, what do you do with them, right? Like in order to keep people engaged, you need to continue to do things. There's different directions, right? Like some of the higher end collections will do huge events or almost like a promoter.
Oh, I had a question on what you guys think about how, like, I think some of the DeFi trends that we see right now are similar to what TradFi might have gone through, like historically, as like the two seemingly converge. Like, do you think products built by like groups coming from TradFi are going to, like, building crypto products are going to do better than crypto natives building the crypto products, like for mass adoption? Like Robinhood is coming out with a crypto wallet soon, as an example.
My personal view is I think they will. Like I don't know if there's even that much distinction of like this is traditional versus not, right? But what's happening in DeFi, like people have been making similar mistakes as history, or as things have happened in the past, or they're kind of rediscovering things. But I think the biggest benefit to people from like the quote traditional world is they're taking stuff that has already existed and they're using these protocols as a tool to just do it faster and better, right? Or they usually have a very specific use case already. They're not kind of trying to invent new ones. And then the others, they have a existing distribution a lot of times. So they have a customer base that they're trying to roll these things out to. They're all going to converge, right? at the end of the day, like these big traditional companies will roll crypto until it's a core part of their things. And then on the other side, there's the DeFi protocols with a bunch of speculators and other stuff will grow and mature until a average user can understand it and start to use it as well. So yeah, I mean, we're kind of an interesting place where if you're a traditional, like for example, if you're a traditional bank, if you don't do anything with crypto, you're gonna lose probably like 90% of your users in 10 years, right? Because that's the new thing that's gonna take over and people are gonna build and compete with you. But then on the flip side, if you roll it out too fast today, you also lose 90% of your users because they don't understand what you're doing.
Yeah, I want to also chime in and add to what Ben has said. It really depends on the application, right? Like if you traditional companies may be better at certain things, right? For example, capability of execution, overall ability to source talents, and so on and so forth. So they may execute on a product development in a much more quickly and efficient way. That's really about it. If you look at a couple prominent projects, for example, Uniswap isn't something that previously existed. People didn't really see the need to do that. There were traditional market makers who were making profit their own way. Nothing really provided the codification kind of infrastructure for running a kind of a market maker like Uniswap. However, as these protocols like mature, as they grow, larger entities being better at say execution and so on.
Yeah, I think there's an interplay between innovation and execution. Are you gonna succeed because you discovered and you innovated a new experience, or are you just gonna get out executed once like people understand how the new thing works?
Yeah, I think you kind of see that with a lot of centralized exchanges, right? I think prior to Binance, the three biggest exchanges were BTC China, Huobi, and OKX. They all kind of got outcompeted by Binance because of they had their own like regulatory issue to deal with back in 2017. They couldn't like execute as well as Binance. But you can kind of say the same thing for FTX. These guys were previously working on Jane Street and all that, and they saw this like opportunity to build a slicker product, right? And that's how they emerged as one of the leading exchanges to this day.
Thanks for the presentation. Really great and great discussion. I had like two general thoughts that I wanted to check you guys' opinion on. What do you guys think about a different metric for TVL? TVL has been the one everyone's focused on, but obviously there's also some issues with the TVL as a metric. Any alternatives for like a better way to quantify how DeFi is doing? And then secondly, obviously DeFi has a lot of strengths, trustlessness, like code is law and so on. But one common argument against DeFi is like illicit behavior and money laundering, and you can't stop that. And whereas TradFi has a lot of regulation and a lot of techniques to counter that. Have you guys got any thoughts on these 2 points? Thanks.
I mean, I think TVL is a good metric for adoption, right? That's just general adoption. It shows you how much capital people have actually is circulating in the system, which is a proxy for how big the system could be. But from an engagement standpoint, I think volumes, number of wallets, active wallets as well, that's also something to look at. Because like I like to look at what people are actually building in conjunction with how people are using it. And TVL will give you a measure of use, but not necessarily what's being built. On the second point, I think it's almost like it's a feature, right? It's like it's a feature, not a bug, that you have non-refundable things. If you think about it as cash, like if you have cash and it's lost, it's also lost as well, or someone steals it, like physically. It's just much harder to do physically than digitally. So I think like the idea of laundering and what people will do, like that's going to happen, and people will do that. They treat that as a cost of business. So for example, cartel revenues are around $30 billion on the US, right? It's purely cash based. As the cash is moving around, they lose up, 50% or more of the revenue that they sell for as the cash gets laundered and moved out. So I think that will always exist.
Yeah, I can add on to what Ben has said as well. I think first point of TVL as a metric, it really depends on the application itself. Like if you think of lending protocols, they generate revenue based on total value that they take in, right? So usually it's I don't know, like 5% per year or something on the value they custody. So in that sense, TVL is a great metric. But if we're talking about Uniswap or recently this thing called GMX, this thing is really popular these days. With these things, it's much more about the transactional volume. Ultimately, it's all about the fee that it generates. There's a really cool website called Masari. So these guys, what they do is they have separated revenue into protocol versus supply side revenue. After all, these are all businesses, and it does matter that what is the fee that's being accrued. And then to your second point, I think it is very much a issue, but people who talk about this point, they don't really care about it either. If this was an actual issue, then we would see regulations being formed so much more quickly. But the reality is the financial crimes in the traditional world completely eclipse the nominal amount of what's happening on chain. Most recently, FTX, Sam Bankman-Fried, talking about how should DeFi be regulated, or just some preliminary thoughts on how DeFi should be regulated. If you're really interested, I definitely recommend you to take a look at this thing. As with anything, right? Like there are bad actors who are taking advantage of the anonymity of cryptocurrency and so on and so forth. Ultimately, I think it really does come down to what are the regulations that will form over time. The regulations could go the wrong ways. For example, accredited investor rule, where it makes so much more sense to judge people's capability to invest into things based on their level of education. Instead, they chose to base it off of whether you have $250,000 of income or $1 million in your bank. It just doesn't make sense as a rule. It's inevitable that in order to integrate DeFi and fully take advantage of DeFi, what DeFi has to give, it should be regulated to a certain extent, but it is up to industry actors like those who are working within crypto to work with the regulators and form the appropriate regulations that uphold the original intent, the original ethos of crypto, such as permissionless, decentralization and so on and so forth, while making sure that bad actors and bad activities are minimized.
All right, cool. Yeah, amazing insights. Thanks both.
That's a wrap. Thank you guys for listening.
Thank you.
All right, bye now.